This question's for Ajit. It comes from Meher Baruka. Climate change seems to be impacting the insurance industry heavily, with major players pulling out of markets like California because of wildfire and flooding risks, combined with payouts increasing. How does Mr. Jain see this risk expanding to other regions, and how has the thesis on insurance investments changed because of it?
Yeah. Climate change, climate risk is certainly a factor that has come into focus in a very, very big way more recently. Now, the one thing that mitigates the problem for us, especially in some of the reinsurance operations we are in, is our contractual liabilities are limited to a year in most cases. So as a result of which, at the end of a year, we get the opportunity to reprice, including the decision to get out of the business altogether if we don't like the pricing in the business. But the fact that we are making bets that tie us down to 1 year at a time certainly makes it possible for us to stay in the business longer term than we might have otherwise. Because of climate change, clearly prices need to go up. It is difficult to be very scientific about how much the prices need to go up. They need to go up a lot, and we keep increasing prices and hope we stay ahead of the curve. But that doesn't happen in all cases. The regulators don't make it any easier by tying our feet to the ground and making it difficult for us to withdraw from certain territories or to make dramatic changes in the pricing of certain products. As a result of which, a number of insurance carriers, including ourselves, have decided to not write business in certain states. I think the regulators are getting a little more realistic about and they're waking up to the fact that the insurance carriers need to make some kind of a return, a decent return for us to keep deploying our capital. It's a constant battle back and forth. It's been against the capital providers these last few years, but I think we are coming back into balance. If you look at the results that have been recently announced by the insurance carriers, everyone's now making record profits. Obviously, that will not last, but certainly for the next several months, I think the insurance industry, in spite of climate change, in spite of increased risk of fires and flooding, it's going to be an okay place to be in.
Yeah, climate change increases risks, and in the end, it makes our business bigger over time. It's not if we misprice them, we'll also go broke. But we do it 1 year at a time, overwhelmingly. And I would say this: I would rather have Ajit assessing this than any 1,000 underwriters or insurance managers in the world. I mean, the factors aren't, we'll take Atlantic hurricanes, which would be probably our biggest risk. There's no question that you can measure the temperature of the water in the Atlantic, and you know what warm water does to hurricanes, but you don't know whether that's good or bad, because it may cause them to turn faster, and it may change the path as well as the intensity and frequency of losses. But we'll write it 1 year at a time, and we'll have Ajit underwriting it. And we don't have to tell you what's going to happen 5 years from now or 10 years from now. And people who don't have sort of analytical insurance minds that comment on this subject really don't expand our knowledge. We get a lot of letters from people that I'm sure have good IQs, but they don't really know. They don't understand the insurance business, and they're not wrong, I don't think, in my mind, about climate change. But if there was no risk, there'd be no insurance business, and we're in the business of evaluating it, and we do it 1 year at a time. And there's some exceptions where you can't do it, where your decisions extend for a long time in the future, and we try to avoid those. But again, You don't need 1,000 people analyzing water currents or anything. You need one very, very, very smart guy. And we've got him. Okay.
Yeah, the only thing I'd add is that climate change, much like inflation, done right, can be a friend of the risk bearer.
And it has been for us. If you look at Geico, it had 175,000 policies roughly in 1950, and it was getting roughly $40 a car. So that was 7 million of volume. And, now we have, we're getting over $2,000. Well, all the advances in technology and everything like that. If we had been wedded to some formula, what we did with $40, we'd have had a terrible business. But in effect, by making the cars much safer, they've also made them much more expensive to repair. And a whole bunch of things have happened, including inflation. So now we have a $40 billion business from something that was 7 million. Back when I called out. So if we'd operated in a non-inflationary world, Geico would not be a $40 billion company.
Please like and subscribe. Thank you.